Hey folks, Dan Frio here, the rate update. Today is November 9th, 2021. We got the inflation numbers that just came out. They're out of hand. But I'm gonna dissect it a little bit and maybe show you a little bit of light at the end of the tunnel. So don't go away, we're gonna talk about rates next. Well, hot off the presses, we're seeing inflation numbers coming in that are crazy. So let's let Rick explain this to you. And then when we come back, I'm going to dissect it a little bit more to explain how I think it's transitory and my thoughts behind that. So don't go away.
Rick Santelli standing by at the CME in Chicago. Rick, you got 2 minutes to think, or 2 seconds to think about it. What's the news?
Well, the news is that 30-year tips are at the lowest yield, negative now at 54, minus 54 basis points ever. Want to pay attention to that. For our October read on the producer price index, the month-over-month change is up 0.6%, exactly as expected. And for some context, the post-COVID high watermark here is up 1.2, and that was in January of this year. If we strip out the all-important food and energy, it's up 0.4%, Joe. That's 1/10 lighter than expectations. Both of these are higher than the rear-view mirror look. This is double our 0.2 from last look. And if we look at ex-food, energy, and trade, it's up 0.4. We're expecting up 0.3 sequentially, following up 1/10. So hotter on all scores. Now the year over year, and this is definitely where the most eyeballs are focused. These are the numbers that have been running hot. On final demand year over year, 8.6 expected, 8.6 is what we end up with, and 8.6 is the second time in a row, and both of these are the highest ever going back to the very first month, which was November 2010, when they recalibrated how they calculate this. And if we look at year over year, ex-food and energy, expected up 6.8, it is up 6.8, and exactly like our last number, it's up 6.8 twice in a row. That makes it the two hottest reads ever going back to November of 2010. And our last year over year is ex-food, energy, and trade. Expected up 6.2. Once again, the economists nailed it, up 6.2. This is the only one where it isn't sitting at the hottest level. The hottest level was in August at up 6.3. So if you're looking for any pause in the PPI numbers, it certainly really isn't in this data set. Now, obviously, the month over month, we're a bit cooler than expectations, at least on the ex-food energy and trade, but they're all hotter sequentially, and it's something to pay very close attention to. We also have $39 billion in 10-year notes to be auctioned today. Yesterday's 3-year note auction was a very interesting, although not necessarily tight auction. Becky, back to you.
Okay, so that's great information. So let's dig in on these numbers. So wholesale prices, this is the producer price index. So on the producer level or production level, how inflation went up. So you can see the Labor Department said the inflation is 8.6 year over year, the highest since it was recording. Surging prices of gas and auto help push the increase. So let's dig in on that a little bit. Right here is the price of oil in just this year. So we went from $47 a gallon to $81. That's a pretty substantial increase. So you might think, okay, well, so what? It's raising gas prices. Maybe more than that. So what are petroleum products, and what is petroleum used for? Well, if you dissect this, 142-gallon barrel of oil creates 19 gallons of gas, and then the rest of it creates this. This is just 144 of 6,000 items. Well, let's break it down and see, how much of this is really used. Well, the first thing is, how does all of our transports, or how does all the products move? Diesel fuel, motor oil. Okay, so what products are moving? All this stuff. Now all this stuff. So we wonder why inflation is out of whack. Well, this is just one component of it that not a lot of people speak of. They're like, okay, the inflation is just going nuts, and here's and why and everything else. Well, let's just say, we know wage inflation's up. Okay, because it's just what it is. Everybody's competing against or to get employees. I drive on my way here in the mornings. So where I live, there's a lot of manufacturing going on. When you go through there, I can almost assure you that every other place has a help wanted sign. So what does that mean? Well, the employers are going to have to pay more to get people back to work. So we know wages are going up. Then we just take everything else out of there. If oil goes up, gas is going up, diesel's going up, oil's going up. So it's making all the products taken from this place, the manufacturing place, to the place where it's being sold or the consumer. How much oil is being consumed there? So you have wage inflation and just say oil inflation. It's crazy, and it's going nuts right now. So again, that flows into my thought process here. When the world gets back to a little bit normal, but we got to do something about oil. But I still say Q3, Q4 of 2022, everything's going to start coming back through. So the Fed right now is in a predicament. That's why I said yesterday, what they said was genius. I didn't say what they do is genius, but what they said is genius because it calmed the markets. They came out and said, we're going to taper. So me, as well as the markets, expected, well, it's going to collapse. And that's why you saw a huge reversal. You saw a collapse in the especially the bond market a couple weeks ago, when all the announcements start coming out in the inflation front and everything else. So that's that part of it. Where are rates today? Well, this is yesterday's close. All right. So where rates are today on a 30-year, 15 FHA jumbo and the 5-year. The 30-year is down 2 basis points to 307. 15 is down 2 basis points to 248. FHA is down 5 basis points to 263. Jumbo's down 1 basis point to 304, and the 5-year is down 13, continues to just crumble to 275. So, guys, these are not my rates. These are a survey of rates all over the country. You can see MDS rate survey is updated at 4 o'clock Eastern time. So this was last night's numbers. So what does this inflation headline news doing to the mortgage-backed security market? Well, this is what's going on. So people follow me because of this right here. This is what is the biggest component of your mortgage rate. A lot of people say, oh, the 10-year Treasury is doing this or whatever. Guys, I want you to focus strictly on this number here. So this is what's happening to the price of a mortgage-backed security bond. Bond, when you invest in bonds, as the price goes up, which this represents, the yield, or in this case, your mortgage rate, because that's the yield of this bond, is coming down. So look at what's happening when the fear of inflation came out, and it was the buzzword all through mainstream media, we had this correction. Now we've had a rally up through the markets. All right. So this is basically saying, how is the environment looking at this? Here's my thought. And again, this is what's going on with the mortgage-backed securities market. Is this inflation number is going to hurt the economy, but slow down the economy. So the Fed's sitting there saying inflation's running out of control, but they know forbearances are playing a part of this. The excess stimulus is playing a big part of this. The unemployment's playing a big part of this. Oil prices are playing a big part of that, and that's why they're thinking it's transitory. A lot of investors are jumping on that bandwagon right now because you can see the rally in this right here. Okay, so that's where we are. The economic news for today is there's a big bond auction at noon today. This is going to be interesting. But the PPI number, this is what the Fed uses primarily in their inflation watch. So we saw the producer price index month over month come in, and it was 1/10 higher than what was expected. I won't say that's a crazy number. X food and energy, look, it was down. It was up from the previous month, but it was down 1/10 from what the consensus was. Year over year, that's where we get our headline, or one of the headline numbers, a 6.8 is the actual, but that's X food and energy. And now the producer price index, that's where we get our 8.6. So the consensus was 8.7. We came in a little light of that. And last month we were at 8.6. So we're holding steady right there and then. What's happening today throughout the day so far? We had a huge rally right out of the gate. This was an anomaly. We were up like 20-something points this morning, and then all of a sudden it just crashed, and then it recovered right back. So this is kind of weird when you see this crash, and then it picks right back up here, these candlesticks. So that means to me, there's a lot of buyers in the market. So we can continually see a little bit of rally in here. But as we know, all this stuff usually trades. Stocks, bonds, things of that essence usually overreacts. That's why my concern is I hope the Fed doesn't overreact on things and kind of crash the markets again. But you could see here, it overreacted. And then once the news came out, the markets started rallying into territories where we should be. So later today, I'm going to post a video of how we ended the day because I want to see if this rally continues. Plus, I want to see how this Treasury auction goes right here because that'll show me how the environment or how the investors are treating bonds right now. So that is it for this morning. If you're in the process of a mortgage right now and you want to reach out to us to say a few things. One, Dan, what can you do for me? I need pre-approved. I'm in forbearance. I need an exit strategy. I want to refinance. Does it make sense? I want to put on an addition. Can we do that? All those things. Here's where I need you to go. Go to therateupdate.com. You can give me a call at 844-775-LOAN. That's 844-775-5626, or schedule a meeting. So you might be saying, I'm looking to buy a house, but here's my dilemma. Here's my situation. Just because you find some mortgage company online doesn't mean they're specialized in this. A lot of them are order takers. So I can help be your mortgage advisor. If you want to apply online, we have state-of-the-art online application. You click here, fill it out. It'll take about 10 minutes, but basically you've done everything yourself. You've put in your information. You could pull your credit, see your credit scores, and actually follow your loan throughout the entire process. So those are some of the things we can offer you. If you're in the process right now of a mortgage and you applied somewhere else, within 3 days of pulling their credit, they have to send you what's called a loan estimate. I'm going to be your mortgage consultant. I will review this to make sure you're getting the best rate in the market as well as the lowest fees. So how you can send that information to me, it's a secured system. Go to therateupdate.com, hit under resources right here, and down here, upload your loan estimate. What you're going to do is click this button right here. It's going to take you to this. In the message section, tell me the story. Where are you looking to buy? What state? What are your credit scores? And give me just a little bit of caption of basically tell me about what you're looking to do. I'll review everything and get back with you. It's taken us a little more than an hour right now because yesterday, I think we received almost 30 of these things. So people are reaching out. Thank you guys for watching. Thank you for spreading the word, and thank you for reaching out for help. So give me most of the day. If you do send a loan estimate in, I promise you I'll get back with you. We have a whole database here. I think we have about 50 of them that we've been working on for the last 48 hours. So we will get back with you, I promise. Thanks for watching. Please tune in later this afternoon. We're going to